Hello, everyone. I'll be starting in just a moment. Hey, John, how you doing? Bando, Toby, Mark, Enda, Neelan, Arnie, Eduardo, good to see you as usual. Tim, Curtis, good to see you. Alan, nice to see everybody. All right, I'll give this about 15 seconds and then we can get started. Jasek, nice to see you. Len in Calgary. So nice to see everybody. All right. Welcome to the third and last installment. Why is this not working? I'm not sure why. My computer seems to be frozen just at the right time. Sorry about that. Just give me a moment. I am not sure what is going on here. Let me see if I can just jump to the charts then. Sorry, I am okay. Maybe this will work. So welcome to the last of the 3-day live execution webinar series. My name is Mark Shawson, the Pattern Trader. This week, we've been talking about how to look at and capitalize on opportunities in the markets only based on price action. So there is so many events and news items swirling around in the world. And if you try and think about things and try and figure things out and then try and figure out a trading strategy to do that, perhaps if you've got a longer term time frame, maybe you can pull that off. But even the buy and hold guys have been exposed that that's a bit of a canard. You know, if you bought Amazon 5 years ago, you would be making new lows. You would be under where you bought it 5 years ago. If you bought Disney, you'd be under where you bought it in 2014. So for years and years, we've been hearing from the crowd while the market was going up. And it's always when the market's going up, it seems like it's always going to go in one way forever. But last year really exposed the canard of a lot of myths in trading and investing, especially buy and hold. You know, last year was one of the first years in like 30 or 40 years where you had all risk assets go down. So one of the other things that you've been told is this 60-40 portfolio mix, that by and large, you should put 60% of your assets in stocks and 40% in bonds. And usually when one asset class is going up, the other one's going down, and that way you can keep pretty well diversified. Well, last year, both those asset classes cratered and you got creamed. So to my mind, you have to understand what you're doing, have to think for yourself. Don't let anybody else tell you what else to do. And this is what I try and do at the Pattern Trader. I try and educate our members on looking at the markets, understanding the markets from the price, because to my mind, price is ahead of the news. Price is ahead of what's going to happen. So tomorrow we've got a huge event in the form of an inflation report. Consumer price index will be announced before the market open. And the market's already been moving this week and for the last 3 weeks. And I told you yesterday that I was buying the market. I came in long. The S&P was up 500 points. The QQQs were up 500 points. And I made a whole bunch of dough today on buying things, shorting things. And, you know, again, the CPI hasn't even come out yet. So to my mind, price is ahead of the news. Only amateurs trade stories. Sorry, I got something in my throat. Sorry about that. So this is what we do. We look at price action trading. I shared with you my 4-step trading methodology. I also shared with you my book. It was a Pay What You Want on how to identify the phase or the condition of the market. Basically, markets can be in uptrends or downtrends or going sideways. But to my mind, where the money is made is on the turn, when markets go from one direction to another. And before that, they always form a chart pattern, double bottom, inverted head and shoulders. And then once I see a chart pattern or a trend, I try and identify what I call an insurance day bar. Yesterday, I talked to you about a key reversal in American Express. And today, American Express was up several dollars. I made a lot of money trading American Express just based on that key reversal bar. I bought Qualcomm today based on an inside day bar. And so this is what we've been talking about all week. So yesterday I came in long the triple Qs, the 271 calls. Today the triple Qs closed at 277, up 600, up six points from where I bought it. I bought these things for 2. I got out at 5. I made 250% on my money. I bought the 389 call options in the S&P. Today, S&P closed at 395. I sold these $2 calls for almost $6, 300% on my money. So I made almost $100,000 today. And then I came in short BNTX and covered half my shorts down $7. So I was short 4,500 shares, and at one point BNTX was down $7 today. And I covered half my position. I was also short, I bought put options in Dick's Sporting Goods. I was also short Moderna. Moderna came in down $5. And then I've also got Moderna put options, which is a bet on the downside. I bought Qualcomm, and you can see here is where I closed out 2,000 shares of BNTX at 147, basically the low of the day. And that was down about $7 from yesterday's close. So, you know, I do this only looking at price action. So I was able to make a whole bunch of dough on betting on that the market was going to go higher today. And basically, I've been long for the last couple of days, even though I think the market's going to go lower. So, you know, this is what trading is all about, is understanding levels. And it's not thinking about what the Fed's going to do and where interest rates are and what CPI is going to do. It's basically looking at the market objectively and understanding the prices, the trends, the patterns, and the price action. And we've been talking about this all week, the S&P and the triple Qs, which is the NASDAQ. I'll briefly go over it again. I'm basically going to just open this up to a Q&A. I'll tell you a little bit about what I'm doing. So you can see this is the S&P 500. You know, you can see how well these markets adhere to the technical levels. On the way up, it was bounded up by this uptrend line. On the way down, this downtrend line. You can see this very orderly channel that was trading in on the way up. And now you can see that there is this kind of megaphone looking formation on the way down. Now, I still think we're in a distribution pattern. I still think this is going to go lower. You know, within this distribution, you have this double top. And, you know, it's everything in its time. The markets are both price and time. So even though I think this is going to go lower for a time, it could go higher and then it's going to go lower. And the question is, you know, figuring out when it's going to do what. And that's what I help our members do. Every morning, I have an early morning program that starts 45 minutes before the start of the US stock market. And this is where I really suggest, if you're interested in working with me, sign up for the Elite program or the Boiler Room. I'll put that email in the chat box there if you're interested. So I put that in the chat box if you are interested in learning more about what we do and how we do it. I talked about, yesterday going long the market before the market opened and, going long today. And tomorrow we have an inflation report, which I expect the market will probably open higher and possibly much higher. I don't know what the report's going to be, but the market's telling me that's in a pretty powerful phase. And that I think that we still look like we're going to go to 41, 42, maybe even 43 on the S&P before we go lower. Now, you could open higher tomorrow and then, have a lower close, and it could do all kinds of things, and I will adjust my strategies accordingly. But I do think we have a structural problem. The Fed has raised rates more than at any time in history. They've raised 450 points, and they've done 450 points in the past, but never as fast. And I don't think the market is fully adjusted to that. So notwithstanding anything that comes out tomorrow, I have a certain view and, trade around certain levels. This is the triple Qs. You can see we've also been coming down in an orderly manner. Then we hit this support area, and very likely that we're going to go to this 285, 290 area, and then we'll see what happens there. But this is still a bear price pattern. And it all started with a double top right here. So the patterns basically precede trajectory. So before the market turns, so the market was heading up into that pattern, and then it put on this bearish price pattern, and you can see after that it went lower. So patterns equal trajectory. So before a market turns, it always puts on some pattern that we can identify. In addition to this double top, we also had this head and shoulders, which looks just like a man or woman's left shoulder. The peak is the head, and this is the right shoulder. And then you have basically a neckline that comes through it, and when it crashes through the neckline, it basically confirms that this is a big, bad bear price pattern. And so you can see, while you have rallies, these are just bear market rallies within a bear market. And I expect this one to be the same. It looks very convincing, looks great. Everything's rallying. But to my mind, I don't think this will be sustainable. But, you can make all kinds of money on these counter trend rallies. I bought American Express today. I bought Qualcomm. So there's money to be made no matter what the market is doing. And that is the beauty of technical analysis. It gives you the fluidity and the dynamism to be able to take advantage of up markets as well as down markets. Most people, certainly in the stock market, are buy and holders, where they're just looking one way. Even if it's coming down, they're looking for it to, come down and then, buy it and then go back up. To me, Now buy it while it's going up and sell it while it's going down. So that is, the beauty of, and you can trade any market, corn, gold, the euro yen, IBM, it doesn't matter. If it has a high, low, and close, it doesn't matter what the instrument is. You can basically take this away and you should be able to analyze this on any basis. So let me just drill down to the daily here, show you what happened today. So you can see yesterday I bought those options, and it was a big bet because those options actually expire today. So I needed this market to work and work right away. And the reason I took that bet was that I saw this reversal in the direction of what I thought was going to be the movement by virtue of this pattern, this rounding bottom, this coil, and now you're going to have an energy thrust out of here. I mean, you could come out of here, guns a-blazing tomorrow. If you get a good print on CPI, this thing could really go higher. I do expect the S&P to go 41 or 4,300. So there's still, I think, some room left on the upside here. Same with the NASDAQ. NASDAQ's got a bit of a bottom here, and it had this key reversal yesterday. It made a new low, and by the end of the day, it closed on the high. So basically, I look at the pattern, and then I wait for a bar that tells me how to identify my risk and reward. So basically, my mindset was buy there and put my stop loss there. So that's my risk, and who knows what the reward is going to be. So that is how I set up my trades. It doesn't matter what I'm trading. I did tell you earlier on Monday that I thought that these two stocks were going to be basically the Tesla of this year. So I have been short. I told you on Monday I was short. Yesterday they were higher. And, that's just part of the deal. Nothing goes straight up or straight down. But to my mind, I'm trading a certain scenario. So this is Moderna and BioNTech. They're in the same industry. They're kissing cousins, of the same industry. Actually, BNTX is slightly weaker than Moderna, but basically I'm looking at a pattern, and pattern equals trajectory. So the top chart is Moderna. You can see that we've very subtly been forming this kind of reverse symmetrical triangle here. Maybe it's possible for this thing to come back here and hit it here. But I do think on balance that we're likely to go lower because of the pattern. Now, once I see a pattern, then I look and see how does the market respect that pattern? Meaning, does it go according to what the pattern's indicating? And if it looks like it's going the other way, then I will trade it in a different way. And it's very hard to go in through on this short program, but this is what I help our members sort out. What is real and what is not, and if we see a pattern, how to trade around it. BNTX, same deal. You have a beautiful classic double top. And just like we saw in the NASDAQ, the double top that started last year, pattern equals trajectory. And so I do expect this to work out lower. That's why I came in short. I was able to take out $7 on the downside today. And on any kind of rally, I'll add more to my short position. So you can see that we're trading in this very large trading range. But I do expect this thing to perhaps kiss the bottom of this thing and resolve to the downside. And so by the end of the year, I think that this will be the Tesla of 2023. These were the same patterns that I saw in Tesla that I told our members about over a year ago. and Tesla was down 70% last year. So all of last year and probably 3 months even before, last 15 months, I've been telling our members that you need to be short Tesla. So it doesn't matter what the instrument is. When we see certain patterns, they start telling a story. So right there, this thing started telling us it was over. Then it put on a triple top. So you could see that this was a big, bad distribution. This is where all the smart money was getting out. And so the markets tell us a story. And if you understand that story and how to recognize it, and then, you know, here you had another intermediate double top. So these patterns precede trajectory. And so this is BNTX. So I think it's going to look like this by the end of the year. So this is how I trade the markets. I don't understand the financial statements, the cash flow, the price earnings ratio. I don't even know what this company does. I don't care. I'm just trading a risk reward opportunity. So I came in short. I started shorting this, you know, up in this earlier area here, and you can see it's just been thrashing around. The last 2 days, yesterday was up pretty big. I didn't worry about it. And today came in down $7, and I got out of some just because it was such a large trading range. Let me just get out of this. So this is BNTX. And again, to me, this is tracing out a huge double top. And then you have this kind of head and shoulders looking thing. And so if you're conservative, basically wait for confirmation and penetration underneath this neckline around the 145. And, you know, I think you're going to be seeing new lows on this stock at some point, notwithstanding the fact that the S&P and the NASDAQ and everything was straight up today. So that is the beauty of looking at markets. So to me, it's not a stock market, it's a market of stocks. Some stocks like Apple were up today and BNTX was down. So I'm short some and I'm long the others, again, just based on price action. Simon says, how should we identify the higher probability trades? So to me, I look for patterns. I look for patterns and trends. And, you know, the bigger the time frame, so, you know, you can start from the monthly. That's a little bit not really conclusive. So to me, I will start looking at a longer term time frame, understand what the market is telling me, understand that this thing has topped so that every time it rallies, I then short it. Are you guys hearing me? Dwight, are you
we're
there?
hearing it.
Okay, yeah, I heard something cut out here. Okay, all right. Thank you for confirming it. So once I understand what the deal is, what is, you know, there's so in this time frame, all the way in 2021, 2 years ago, this traced out a pattern. So again, if you're looking at a 15-minute chart, you're only seeing 6 days of history. In this chart, I'm looking at something with 2, 3, 5 years of history. And so this tells me what is really going on. So not, you know, every time this thing rallies, I short into it based on this. And so I think Simon says, how do you understand high probability trades? So I look for what is the direction or the phase of the market. So I think, if I had a 6-year-old sitting next to me and I said, well, is this an up or a down trend? This market's gone from $500 to 150. Is that up or down? That's in a downtrend. So, we want to basically trade in the direction of the trend. Now, there are all kinds of times where you put on a bottom here and you do what's called a counter trend rally. And I will trade those too. I think the S&P is in a counter trend rally. I'm long right now, but I do think the S&P is going to go a lot lower. So it's kind of understanding what is really governing or dictating a market. So this is what I call a governing price pattern. That top is telling me that by and large, this market has topped. And over time, this market should work its way lower by virtue of the pattern. Now, sometimes the markets reveal patterns, and then the market starts going against that pattern. And we call those busted patterns. So I don't want to get all really complicated here. I just want to kind of share with you that there's a way and a framework that I use to trade any market condition. And sometimes when something simply doesn't go in the direction it's indicating, then it's going to do that other thing. So this is the chart of Ferrari, ticker symbol RACE, R-A-C-E. And you can see we had, at this juncture, a very nice looking double top. But there are certain times where I'm very skeptical that, that top is really a top. But, again, you don't have to think of it. You just see what the market. So once the market cut through this neckline, then typically what you have is the market usually goes through a neckline, it retests that neckline, and then if that's really a good pattern, at this retest, it should fail and we should go this way. But you can see that this had very different behavior. Once it broke out, then it started breaking back above this neckline. So now this triggered all kinds of red flags. If you're short and this comes back and starts coming back through here, you realize that this top is just a temporary phenomenon. And you can see now we started to bust it. So by coming up through here, we started to bust the implications, and now we're well above here. And this is what I said in our boiler room all the way back here. I said, this is going to be a busted pattern. And if it's not going to go down, it's going to do that other thing. And I think there may be some people on this webinar that's in my boiler room, and they can attest to that. I was telling them to buy it right here, 220, even though we had this double top. So again, a little bit confusing. There's patterns all over the place, and you've got to determine which ones are the governing patterns and which ones are. So we had basically a pattern down here, which was the real pattern, this inverted head and shoulders. This was the bull pattern, which told us now that this thing is going to be an uptrend. So once you see one pattern, then you can understand that, this is a fake out. So there's a lot of nuance. I can't really adequately explain it in the time we have available. The whole point of these free sessions is to demonstrate that I've been trading a long time, and I understand the structure of the market. And this is what I try and communicate to our members. And you can see that this thing has been in a very nifty channel, that even if you didn't understand this, you could see that these inflections were going to lead to that. So this is what I do every day at the Pattern Trader. We go into the live markets. We assess the market before it's even going to happen. And this is what we share. Tyron says, how do you determine what the governing pattern is? You just have to understand charts. And it gets really confusing. It gets really, and this is the whole challenge of trading. So the markets turn from one pattern to another. So this was a governing pattern. This was a double top. And it did its job. If you shorted that top at 260, it went all the way to $160, and you could have made 40% on your money. But this is also an uptrending market. So let me so this, you have to kind of balance out and weigh so many things when you're looking at charts to determine what the real deal is. So on one hand, if you were looking at this time frame, it's really bearish. But if you consider this long term, this still is in a trajectory of higher lows. And you can see how well these lows intersect along this line. So this has been basically an uptrending market. And perhaps that's where, it's going to rally to, and then it'll have some trouble. So these markets bounce off these technicals very well. But this is an example of how a market goes up, it hits an area, it gives you an indication that it's going to come off, and then it comes back to another area that is the long-term support line, and then forms this double bottom, and then starts going another way, and then we'll start another pattern. So the market is a very dynamic and fluid place. Sometimes these patterns are very straightforward. You see a double top, and then it just keeps going down thereafter. So an example of that is maybe this. I said this was going to go to 0 at, because this is just, again, you can just look at this thing, and it doesn't take a genius to see this is Roku. So you go up in this parabolic move, and you put on this perfect top. And the bigger the top, the bigger the move. You can actually, measure these moves from the top of this neckline to the, so it was from what? 275 to 500. And then you minus $275 off that, and you come back to this. So I could have I did. I said at this point, this thing was going to go to 0 because of the size of this double top. And you can see it just never looked back. So sometimes you see these patterns and that's it. And then sometimes it becomes, much more dynamic. So like Alibaba had a long-term top, and then it started putting on another formation that indicated that that was going to turn around. So the markets go in cycles. They don't go one way or the other forever. But if you understand that pattern, so here was this double top. Even though the tops aren't in the same, it doesn't have to be symmetrical. This looks like an M top, a double top. And you can see from that point at 220, that was the time to short it. And it went all the way to $50. Now you're starting to see a potential bottom. We won't know until it's basically confirmed, which it needs to take out that neckline. So the markets go from one area to another, and we just look for the patterns that then indicate the next trajectory that it's going to go on. Do you trade Forex pairs? Yes, we trade everything in the boiler room. So basically, it's a very interactive thing. I kind of share what I think are the high opportunity things of that day. Then, if somebody has questions, we go into gold or whatever we want to look at. So, really what I'd like to do is just have or entertain questions that pertain to the methodology, price action, and whatnot. Eduardo, yeah, I'm pretty bullish on SLB. It's kind of breaking out here to the top, and I think that it will continue going. So this is SLB. It used to be called Schlumberger. I told our members in an email to buy this right here at $36. I had all of these call options, and I made a ton of money. I don't even want to tell you how much. It all started with a pattern. Market came straight down, hit a bottom, backed off that bottom, hit another bottom, and now we have this bottom. So this is patterns tell you when, so things just don't go down and then go back up. They always are preceded by some discernible pattern. So if you understand the pattern, then you can hop on board the trajectory. So since that thing bottomed, this thing has been in a huge kind of ascending triangle here. And it looks like, it's going to at least that area. I think you'll see a 7 handle on Schlumberger. This thing's in a big bad bull trend. You had a nice key reversal a week ago. All you have to do is buy that breakout of the key reversal. And I think that you should make some money, Eduardo. I don't know what call option you bought. I don't know how much time you gave yourself. That's the kind of the trick with options, determining what the trajectory is and then how much time to allow it. And the more time you give it, the more you have to pay. So it's a whole tricky thing. It's not really a science. I kind of eyeball something and say, okay, I think that, this thing's going from $55 to, $63. There's an $8 move here. And then the question is, how long do I think that that's going to take? So I'll buy an option a week, out, 2 weeks out. And then sometimes if I really like something, I'll buy it further out. Now, I'll just kind of share with you. I'm going to show you the chart. I'm going to give you a tease and say, I think that, I'm looking for a big move on this stock. So I'm just going to leave it there. This is DKS. I think there's going to be a big move here, and you'll have to join to find out. Can you analyze the gold chart on the weekly? So I don't want to go through chart after chart. This was just basically an introduction to share with you a way of looking at price. And I'm going to leave it after this. So gold is a very interesting, and just to, share with you, I've made a ton of money on gold, principally on the downside, but also on the upside too. So here was a gold trade where I was selling gold at 19.19, and then at 18.27, and made all kinds of dough shorting gold. So I was principally looking at gold from the short side, and then price told me that something else was going to happen. So I was looking at gold, and I was pretty sure that gold was going to have a very large downtrend. So there were a couple patterns here. Here's, a conventional double top. Right here, there was a double top and a head and shoulders. So when it punctuated this lower support line, this is where it was $1,800. I said, this is where we should get short. It went lower, made about $100 on that trade. And then it retested, which I expected. And then I thought, well, if that was a good trade, it should have kept going. But this is where price tells you, what it wants to do. And right here, you can see there was this triple bottom. You had 3 lows, 1, 2, 3. Now, this is a weekly chart. So these are weekly bars, the high and low for the entire week. You can see it made a new low, close on the high, made a new low, close on the high, and made new low, close on the high, right in the same area, right at $1,600. So you can see every time this thing went to 1,600, by the end of the week, the buyers were in control. So, I was very bearish gold at this juncture. But this is where, having an opinion and, getting on one side, you got to look and see what price is telling you. Now, it was also in an area where you were seeing these kind of reversals in the same area. So every time gold got down to here, the buyers came in and it closed on the high of the week. Came in, bought it. Came in, bought it. Came in, bought it. So this whole area was a zone of accumulation. Every time this market came in this area, buyers were stepping in and buying this thing. So while I thought gold was going to go lower, the price action disavowed me of that notion. So now we have, you can see how one pattern then gives rise to another. So you had this double bought top, you had this head and shoulders, and for all the world, this should have yielded that. But instead, you got a move out of that head and shoulders. You could have certainly made a lot of money recognizing that pattern. I did. And now we've kind of given way to another pattern in the form of this upside down or inverted head and shoulders. Just looks like an inverted, head and shoulders, an upside down. So a head and shoulders looks just like a man or woman's head and shoulders. And that is a bearish pattern where this is a bullish pattern. And you can see also the fact that just like Ferrari, once it trips under here, it should go. Once it starts revisiting the same area, then it's very likely to do what Ferrari race did, where you can see race went and made a new high after it triggered coming through that neckline again. So I'm actually extremely bullish now on gold from a fundamental and a technical standpoint. I think we're in a stagflationary environment. I think interest rates, notwithstanding the fact they've gone very high, are still under the real rate of inflation. Now, we'll find out what the inflation is tomorrow. But even if it's in the 6s, the 2 years trading at 420. So we're still under the inflation rate. So I think the stagflationary environments and the negative, real rate of return is going to be bullish for gold. I think gold for 2023 is probably the asset class that is really going to bet. So our chart patterns are on the weekly, monthly, daily. You could look at something on a 15-minute chart. The reason why I don't suggest you use a lower time frame than the daily is because, again, my objective is to make big money in the market. If you get moves like this and this, you can bang your head against the wall, trading in and out 5 times a day, trying to scoop out $2 and $2 there. I'm trying to take the meat of a move. When I see a move, I want to, take a chunk out of that move. So the only way you can do that is to look at the higher time frames. And the only way to understand what's really going on is to look at the higher time frames. And then you also stop yourself from over trading. trading in and out, 5-10 times a day. It's fun. It's a distraction. I like to gamble. And I realize that I'm very susceptible to doing that. So I've kind of created a discipline for myself where I only trade on the opening or on the close. If you trade intraday, you're basically just gambling. It looks like something, you want to join the fray, but you're just gambling. Yesterday, I said buy American Express. All you have to do is buy it on the opening, and you're up several dollars on the day. So this was the analysis I did yesterday, and I'm going to leave it off here. Where, I said that we've got this coil and that it's likely to unleash in that direction. There was a bunch of preceding patterns, this double bottom, inverted head and shoulders, this double bottom here that suggested, just like gold, this is a giant, area of accumulation. Every time it comes here, buyers want to step in. So this is going to go up. I don't know how high. The first target would be around the 160 area. But, we could go much higher or bounce here and go back lower. But again, what I was looking at was both the pattern and then the price action. So you see here's made a new low yesterday and closed on the high. And as we got together yesterday, I said, just buy this thing. At 152, I said 30 on a stop. The low is 152.27 and it closed at 154. So not the world, but this is how I make trades in the market. Aaron says, thank you. You make trading so much fun. That's a great comment. Francis says, thanks, Mark, for another amazing session. Eduardo says, you always amaze me. You give me so much confidence. Great. So thank you, Eduardo. I would really appreciate if you guys would tell me, let me just share this with you guys. Would be good enough to write a review. I would really appreciate it. I'm going to put the link in the chat box. I've spent a good deal of time. I'd really like to understand, if I've communicated, if this has resonated. Please let me know. Put in the chat box, does this strategy make sense to you? Do you think that using this kind of price analysis would help you in your trading? So Antonio says, yes. Toby says, great job. Are you sending these videos to our email? Not sure what you mean by that. Yashvin says, yes, definitely. Albert says, yes, absolutely. Michael says, straightforward and easy to understand. Francis says, absolutely. So I would really appreciate if you would put in your own words, right here to write a review. Now, you can also, if you're considering joining up, you can just see what other people have to say. Don't believe me, see what other people who've joined, what their experience is. And Tim says, amazing common sense stuff. So Toby, I don't know what our support team does or doesn't do. I just do my thing, and then I don't know how they send everything to you. So Alan says, great content, you're welcome. Laura says, thank you, you're welcome. Tonderai says, yes, crystal clear. So again, if you would just put together a few words of whatever your experience is, good, bad, or indifferent. This is a completely transparent website. It's called Trustpilot. We can't alter our reviews, and everything that is posted is on this website. So you can check out for yourself if this is something that will help you in your trading. John, thank you as always. John's always on these webinars, so appreciate your support and your endorsement. Thank you. Simon says, very informative. I've started using the same candles, which I assume is bar charts. So you notice I only use bars. I don't use candlesticks because to me, it's very important how a market closes relative to its high and low. So to me, I can just visually take a look at this chart and, see all of these things that stand out. Makes a new high, close on the low, makes a new high, close on the low, makes a new high, close on the low, makes a new low, close on the high, makes a new low, close on the high, makes a new low, close on the high, makes a new low, close on the high. So these bars tell you that the market's going down. These guys tell you that the market's going up. And then the overall charts and trend lines tell you where it's likely to go to, where it's likely to pivot off. And that's the fun stuff. And that's what I try and help our members try and figure out. Thanks, Duncan, for sharing all those links. I appreciate it, buddy. Mark, always appreciate that great review. You use my language, so I'm not offended. I use Ninja. I use a bunch of things. I like to see charts on many different presentations. I look at the charts on my broker platform, and it shows me, a different look. When I look at the, the bars through this prism, I kind of see it in a different way. When I look on my MetaTrader, I see it a different way. So I look at a lot of different charts. And so, it just, I like to visualize things, from a number of different perspectives. Sometimes just looking at the bars that are, a little bit thinner and a little bit, spatially presented just actually makes me see things in different ways. So it doesn't matter what you use. This is just high, low, and close. Ninja gives me a lot of fancy tools. MetaTrader gives me a lot of fancy tools. And I just look at pictures. And from a picture, I can say, this is a top and this is a bottom. So I'll trade this way and I'll trade this way. And then I'll see where this thing wants to go. The market will tell me where it wants to go. Jonathan says, thank you for sharing your experience. You're outstanding in every aspect. Thank you for your candor and transparency. So Jonathan, very nice words. I appreciate it. I would really appreciate if you would share those words on our review website. So we have different programs, HH. You can inquire from our support team which one. So the Elite program is everything. I send out a daily email and we do weekly Friday sessions, and that's all part of the Elite. The Boiler Room is part of something called the Accelerator. So you can determine what you would like from us and have our team just sort it out for you. It's just not what I do. Tim says, great 3 days. I took a lot of notes. So you guys are welcome. So again, just write me an email if you're interested in any information or signing up to any of our programs. Thanks for clarifying. So Duncan says the Boiler Room is part of the Elite program, not the Accelerator. So, and I would really, again, it sounds self-serving, but to me, the Boiler Room is the best thing of what I do. I send out daily emails, but obviously with the market moving as fast as it is, I can't communicate the nuance and a lot of things as well as I can every day in the boiler room. So every day we come in, we look at the setups. I kind of explain what I'm looking for. And, it's a much more dynamic way for me to communicate. Thanks, Duncan. I appreciate that. Frank says, I want your book. So let me see. Let me put the handbook in there. If I don't know if hopefully this link still works. So you just come here and add it to the cart. And all proceeds go to the American Childhood Cancer. So you hit here and just go through the steps, Frank. Simon says, I read your book today. It was an amazing read. So hopefully that clarified. I know in this short, couple days, it's hard for me to communicate, all my ideas. The book does, just does just adds to what I'm trying to communicate on these sessions. But it all comes down to price. I don't care what market I'm looking at. I don't know what's driving it. I don't care the why behind, why a move went from here to there. That's for the pundits on TV. To me, I'm just looking to make money, and I'm looking to understand how to assess risk and reward. And to me, that's really what trading comes down to. Everything else is conversation. It's all about what is your risk in a given trade. So if I think I've seen something, if I think I'm seeing a bottom here and I want to figure out how do I get in here, I wait for a bar to show up. A bar that tells me how to join this trade and where my risk is. And here was that bar yesterday. We made a new low and we closed on the high. So to me, you either buy it on the close or, wait till the day's opening. You buy it here, you put your risk there. And then what happens thereafter, is beyond our control. And once the thing gets going, you can start taking partial profits, what have you, as this thing goes higher. I see a gap right here. So, at a minimum, I think we're going to 285. Probably do it tomorrow. So thanks, everybody. Thanks, Dwight. Hope you got some value out of this thing. I would really appreciate you guys posting a review, letting me know your reaction. It helps me to communicate better for the next one, and also helps other people understand your experience. So thanks, everybody, and happy trails. And if you join up, I'm looking forward to speaking with you soon. Thanks, Tim. I really appreciate it. All right, Dwight. Thanks a million.
All right, Mark. See you around.
Thank you very much, man. Have a good one. Bye-bye.